Welcome to Morningstar's Three Stock Picks. I'm Holly Black. With me is Neil Hermon. He's manager of the Henderson Smaller Companies Trust. Hello.
Hi there.
So a tricky period at the moment, particularly for smaller companies, but you're going to talk us through three stocks you're very positive on at the moment. Where would you like to start?
So we'll start with one of our top holdings. It's number 2 or 3 in the portfolio. It's a company called Team 17. Team 17 is a computer games developer and publisher. It came to the market in mid-2018, so quite a recent entry to the UK equity market. But it's been a huge success. It's up 270% since it IPO'd back 2 years ago. Where Team 17 has its strengths is ability to search at the market for high-quality independent games and then co-develop those products. This green lighting process, they call it, is a core strength of the business and something they've been developing over the number of last few years. Given Team 17's success, they have a lot of independents looking to work with them, means they can pick and choose and get the best games to develop over time.
Cool, okay. Well, let's move on to stock number 2.
Okay, so number 2 again is another big holding of ours in the top 10, a company called Clinigen. It's a diversified pharmaceutical services business. It's involved in the sourcing of comparator drugs and other services, labelling and packaging and distributing in clinical trials, sourcing hard-to-find and unregulated drugs for clinicians and hospitals and pharmacists, and managing drug programs for pharmaceutical companies. Why it's interesting now is share price has been relatively weak recently. Even though it's operating in a market which is fairly defensive, think about pharmaceutical services are generally defensive in this sort of environment. It's seen some impact from COVID-19 as clinical trials have been delayed and postponed. And also we've seen oncology treatment reduce as hospitals are focused on treating COVID-19. We see those issues as short-term. We think there's potential opportunity for this company to bounce back its growth in coming years.
It's quite interesting to hear about that other side of the pharma industry at the moment, because obviously so many companies' results and share prices are being propped up by hopes of a COVID vaccine. Is Clinigen not involved in any of that?
Well, it will be involved in some of the clinical trials around COVID-19, so providing services into those trials. So we've seen some of the more traditional clinical trial operations diminish as they've been sort of sidelined, but they are seeing some benefit. To be fair, it's marginal though.
Okay, well, let's go on to stock number 3.
Okay, something completely different now. So the third stock is Mitchells & Butler, which is a pub company. It owns brands such as Harvester, Ember Inns, All Bar One, Toby Carvery, Miller & Carter, for example.
Well, presumably the last few months have been atrocious here.
Well, exactly. I mean, this is the opportunity in some sense, really. I mean, obviously, it's been deeply impacted by COVID-19. Its operations have been shut for the last 3 or so months. Pubs have just only reopened on July the 4th. They're open again. Trade's not back to where it was to previous levels, and the company essentially at the moment, operating profitably and generating some cash, but not at the levels it was back in 2019. The government's doing a lot to obviously aid the industry. We've seen significant measures around paying furloughed staff, business rate relief, temporary cut in VAT on food and non-alcoholic drinks, and obviously the gimmick of the kind of half-price meals Monday to Wednesday in August, which is essentially to try and remind our muscle memory of going out. This is a stock we've been buying recently. The opportunity here is, as you said, it's been really, really difficult, but the share price reflects that. The share price is down 65% this year, and it makes M&B look very good value. May take time, but in my belief, we will return to some degree of normality from a kind of low-ticket item purchasing from a consumer perspective. I think essentially in the medium term, I don't believe the UK consumer has lost its appetite to go to the pub. On that basis, it's trading at a 50% discount to its kind of book value, and all its pubs are freehold, and about 4.5 times historic earnings. So too cheap for a well-invested business in a fairly defensive space, and the opportunity is because the share price has been so weak this year.
Neil, fantastic. Thank you so much for your time. For Morningstar, I'm Holly Black.